Well, we continue to watch, of course, the labor market that has started to show signs of a slowdown. But the latest report from the Conference Board of Canada has found that the Canadian Hiring Index increased in August, driven by a modest rise in the number of online job postings. For more on the Canadian job market, we're joined by Pedro Antunes. He's Chief Economist at the Conference Board of Canada. Pedro, it's always great to stop in with you. Thanks for making some time for us. What does the Conference Board of Canada's latest data show on the Canadian labor market?
Well, yes, in fact, the hiring index, which essentially measures unduplicated job postings, inched up a little bit in the latest reading in August. But I have to say that we've been on a downward trend since labor markets were really tight, I guess, late in 2022 and through the better part of the year since then. So it's a slight uptick, but I think what we're seeing overall is that labor markets are still slackening. And when I say slackening, I compare ourselves back to 2019. Essentially, if you look at the unemployment rate, if you look at any number of metrics, you're seeing a labor market that still remains in pretty good shape and pretty healthy overall.
So, Pedro, in terms of what's your opinion with the immigration flow we're going to be getting into Canada over the next few years? How do you think that's going to impact the labor market? Will it cause a different, outcome during prior slowdowns?
Yeah, well, it's really, there's a lot of controversy around whether this is the right policy move or not. I think there's two sides to the story, of course, and part of the reason that the labor market is slackening is essentially because we've seen over 1 million arrivals in 2022. We're going to have population growth this year of over 3%, 3.2%. That, is phenomenally strong compared to the 1% that we've had historically over the last 30 years, more or less. So, we're adding to the supply of labor with the strong immigration numbers, and that is helping to slacken, in fact, the labor markets in some respects. And I think the Bank of Canada is very aware of that. On the other hand, however, when you see 3% population growth and wages and employment still rising, that generates fairly substantial underlying strength in consumer spending. So it's hard for the Bank of Canada, for instance, to slow the economy with that kind of momentum. So two sides to the story, but I think overall, the fact that the biggest pressure in Canada has been on essentially the labor market too tight side of the story. I think this is going to help alleviate some pressure.
What are we seeing in wage growth trends, Pedro? That's been a big concern from an inflation point of view. The most recent readings have shown wage growth still at levels that are well above, for instance, the Bank of Canada's 2% inflation target.
Yeah, and if we think that the Bank of Canada will achieve its success in its monetary policy, getting to 2%, wages typically grow 0.5% above that. So, it's essentially accounting for productivity gains. So where we are today certainly doesn't align with 2% inflation. I think there's a fair amount of catching up that, essentially wages were eroded when inflation really spiraled in late 2021, 2022. Now inflation is coming back down, and the wages are still staying a little bit elevated. But I think we're starting to see wages heading in that right direction. We've just put out a report on inflation expectations, and despite the fact that the overall CPI number is ticking up, inflation expectations, in other words, people believing that the bank will have success in getting inflation down, those are still on the decline. So I think that's good news in terms of getting wages more aligned with that target CPI.
In terms of regional differences, what's your comment on Bill 96, that French language law amendment that was put in place last June? Do you think that's going to impact the Quebec labor market?
Well, I think in general, Quebec's labor market has been tighter because of lower immigration numbers overall. And I think that's really the key and part of the reason that essentially Quebec's unemployment rate is record low levels and well below some of the other provinces. I hate to comment on something we haven't done a lot of work on in terms of the policy impacts of that precisely. But I think just in terms of the immigration numbers, we are seeing that tight labor market situation persist in Quebec.
How does housing affordability or the lack of housing affordability in some parts of Canada affect labor mobility, the willingness of people to move around the country to find a job in perhaps a place where they can better afford a home?
Yeah, I think that's a real challenge. In Canada, we've always suffered lower mobility than in the U.S., for example. People in the U.S. were much more willing to change from one state to another if there was a better opportunity, better labor markets. We haven't seen that in Canada generally. We haven't been as, how should I say, as mobile in Canada generally. And with the labor market the way it is, with mortgage rates the way they are, essentially this ramp up in mortgage rates, I think it is making it a little bit more difficult for people to essentially let go of their home to move to somewhere else and find another mortgage at a lower rate if they're still holding on to a mortgage with lower rates than currently seeing. And I think we're seeing that in the real estate market because the number of listings has been a real problem. I mean, even though demand for homes has slumped, the number of listings in generally has slumped as well. And that's kept real estate markets I think the concern of the Bank of Canada, even though we did see a correction in real estate markets and real estate prices in general in Canada, that's kind of turned around, even though interest rates are still very, very high. So there's two impacts there, mobility and affordability, which continue to be a problem.
What have the trends been in Alberta? Alberta historically has been a place where people have traveled to during good times in the oil sector. Oil prices are high, and those of us in this part of the country, and perhaps other parts of the country, have actually noticed advertisements from the government of Alberta, essentially saying, look, if you're looking for a job and an affordable place to live, you should look at Alberta.
Yeah, I mean, Alberta does have some competitive advantages. Let's not forget, though, that Alberta through 2015 through to 2020, 2021 even, was in a very difficult situation. In other words, oil prices had plummeted. You remember in 2020, we actually had negative oil prices for a month or two, and that really hit hard the economy. So they're recovering. The labor market is not as tight in Alberta as it is in other parts of the country, but they are attractive in terms of, essentially the housing costs and in terms of some of the other benefits. Taxes, for instance, are very attractive. So we have seen in the last year with oil prices coming back up, and in fact, oil prices are continuing to ramp up, on a day-to-day basis here. We have seen that kind of revival in essentially oil patch activity. Just a maintenance investment that needed to happen is now happening, and that is creating opportunities in that province. There's no doubt about that. And we have seen a turnaround in immigration, interprovincial immigration into the province.